Welcome back to part two of exploring the dividend growth history of the companies that I own. In the first video, we looked at the utility companies and the telecoms that I owned. Today, we're going to start off by looking at a couple of the energy stocks that I own. So we're going to start off with Enbridge first. So I'm just going to highlight a couple of points here before we get started. For the most part, I find this website to be pretty accurate, but there are a couple of things just to note. Occasionally, I find the yield that they have on their site can be slightly not correct. This one right here appears to be fairly accurate, I think, just going from what I remember. But just keep an eye on that if it seems a little bit not, the way it should be. So you can just check it in another source. But I don't really use this site to look at the dividend yield. Again, I use it for the most part to look at the history of the company in terms of how they have raised their dividend over time. So Enbridge has been a very good dividend grower. More recently, you can see they have raised their dividend at a lower percentage. So the last two raises have been approximately 3%, whereas in years past it was a much higher increase. So you can see 10% in the 2 years before that, so in 2020 and 2019. And then in 2018 it was 10%, 2017 over 14%. It looks like there were two different raises. So overall, Enbridge has been an excellent grower of their dividend. Next, we have Pembina Pipeline. So they have also been a great grower of their dividend, except it's been a little bit of time since they have raised their dividend. So I'm hoping that they will announce a raise sometime this year, because the last time that they raised their dividend was in the beginning of 2020. So just before the pandemic started getting underway. But as you can see, before that, they raised their dividend consistently, approximately 5 or slightly more than 5% each year. And you can see a difference between, it appears that they're more spread out than, say, Enbridge was, but keep in mind, PPL is a monthly dividend payer, so that's why on this site it shows every single payment that's made. So there's more payments in between, or more payments listed for each year for a monthly paying company as opposed to a quarterly paying company. And that is the other thing that I use this website for occasionally, is checking the ex-dividend date and the payout date, as it lists those for each payment period. So those are the two energy stocks that I own. Next, let's have a look at a few industrial stocks. So let's look at Savaria. So Savaria has been a pretty good, consistent increaser of their dividend as well. So for 4.25% the end of last year in 2021, and another 4% the year before that in 2020. So the pandemic did not stop them from increasing their dividend. 10% the year before that, and a little over 16% in 2018. And here you might think, okay, well, this is a big problem. It looks like they cut their dividend by over 50%. However, if you do a little bit more research, it shows that they actually increased their dividend at that time. And the reason why it shows a decrease in the dividend on this site, what I think is happening here is at this time they also switched to a monthly dividend payment. So that is not, it's not factoring this in here. It was assuming, right, because the payment for the quarterly payment, of course, would be more than a monthly payment. So the quarterly payment would have been just over 6.5 cents here, and then they switched to the monthly payment of 3 cents, right? So it was not a dividend cut. They actually increased their dividend. I believe it was by 38%, and then they switched over to monthly payments. So again, they continued to increase their dividend, so it's looking really good. And Savaria is growing a lot as well, not just their dividend. Okay, next company, let's look at Aecon. So Aecon has been, their stock price has been hit hard here recently. I've been adding some as I believe it's been a great entry point. And they are a fantastic dividend grower. So last year, close to 10% raise. The year before that, another 10%. The year before that, 16%. And you can see it keeps on going, 9%, 15%, 11%, so that's awesome stuff. The final one we're going to talk about is Bird Construction. They have not done a very good job increasing their dividend. So I do not have a very large position with them for that reason. The next sector I'd like to focus on is the financial sector. So the stocks that I own are Bank of Nova Scotia to start. So as with all of the major Canadian banks, they are great dividend growers. So just recently, the end of last year, they announced a 11% raise. And you can see this little block of time during the pandemic, they were not permitted to raise their dividend. But anytime before that, you can see they raised their dividend multiple times a year. And I'm sure we can expect the same moving forward now that they are allowed to continue to raise their dividend. Next one is Manulife. Okay, I'm not sure why it's showing their dividend increase at the end of last year as a special dividend. As far as I understood it, it was an increase for not just the one payment. So I believe that should be now 33 cents, if I'm not mistaken. So, and I think it was an 18% increase is how they announced it. And then the last time that they had raised their dividend before that one, similarly to Bank of Nova Scotia, was before the pandemic, a 12% increase at the beginning of 2020 before everything started going crazy. And then before that, you can see some very strong raises, right? A lot of them close to 10%, if not more than 10%. Next one is Power Corporation. So at the end of last year, again, a 10.6% raise, and then 10.5%, sort of, again, near the beginning of the pandemic, 6% in 2019, it's around 6.5% in 2018. All right, so you can see the nice consistent trend of dividend increases. Okay, next one's National Bank of Canada. So nice 22.5% increase announced at the end of last year. And then before that, nice consistent here. They had 2 in 2019, so over 9% it looks like. And then you can see a steady stream of increases. Looks like, again, multiple increases each year, which is great. Because, again, there are multiple ways that you can make gains, right? Dividend increases is like an instant raise on the shares of a company that you already own, right? And that's on top of just the dividend that you're getting and probably reinvesting. I know I am reinvesting my dividends. And then, if you get any stock appreciation, that's a bonus on top of everything else. Okay, next, I only own one REIT, but this REIT has a very nice track record of increasing their dividends. So last year, at the end of last year, they announced a 13% raise. Right, so this is Canadian Net Real Estate Investment. And then the year before that, they announced a 17.37% raise, and the year before that, a 15.14%. So again, these raises are happening during the pandemic, so nothing was stopping them. And with REITs, you don't typically see these strong raises like these. Okay, and the next three are stocks that have low dividend yields, but two of the three have a very strong, consistent dividend growth over the past few years. So the first one is Metro. So Metro just announced, actually, I think it was last week, a 10% raise in their dividend, so that's awesome. 11% last year, 12.5% the year before that, right? So again, all of these are double-digit raises, which is awesome. So they currently have it's a low yield, but it's growing at a very fast rate. Next, we have OpenText, which is very similar in terms of dividend growth with Metro. So a low current yield, but a yield that is growing by double-digit percent every year. So 10% last year, 15% in 2020, 15% in 2019, and it looks like pretty steady 15% each year, as you can see. And finally, so as far as I can see, Park Lawn Corporation, I love the company. Unfortunately, they don't raise their dividend. So I'm hoping at some point in the future this will change. You can see it's changed right here, as they announced at the end of last year. They were switching from a monthly paying system to a quarterly paying system, but they did not increase their dividend. They haven't decreased their dividend any time. They just have been consistently paying out the same amount each time. Okay, and now just a couple more that I have left. Northwest Company. So their raise at the end of last year wasn't very large. I was a little disappointed. It was a little less than 3%, but again, a raise is a raise. The year before that, it was a little over 9%, 3% in 2019, 3%, looks like they did not raise in 2018, 3% in 2017, close to 7% in 2015, right? So it looks like they went through a time period where they only did it every 2 years. But again, it's nice to see these increases. So close to 3.5% for 2014, 8% in 2013, 8% in 2012. Okay, next company is New Flyer. So this is a little different than a lot of the companies that we've had. They've been hit hard here recently, and they did decrease their dividend, and they basically cut it in half, basically near the start of the pandemic. I do think I just recently started a position, as I think it is good value. And before their dividend cut, I don't like to see the dividend cuts, but I hope they will begin to increase their dividend again. As you can see, before the cut, they had consistent increases. So 13% in 2019, 15% in 2018, over 36% in 2017, close to 36% in 2016. So I hope once they start to recover, they will begin to, increase that dividend again and hopefully get it back up to the levels that it was previously. There is one final company that I do own. It just reinstated its dividend. It's Amerigo Resources, so the website doesn't have them on here. Basically, it's for me to gain a little exposure to copper, as I think copper is going to be super important over the coming years. So yeah, that's it. Hope you guys enjoyed the video. We'll see you next time. Please leave a comment below if you own any of these stocks and love the dividend increases that they continue to deliver. Let me know if you have any other suggestions. Are there any dividend growth stocks that I'm missing and I should be taking a closer look at? Okay, thanks. Have a great day.